Hey everyone, it's Cam at American Community Bank. We've got the Fed announcing their rate decision tomorrow, so I'll have more for you either tomorrow or the next day. But in the meantime, I was looking at the US GDP data for quarter one and quarter two of 2025, and I think there are just some interesting kind of anomalies in that data that's worth looking into. So I wanted to show you a couple of things on that. Okay, so I wanted to lay some really quick groundwork here. This is 2024 GDP. You'll see the largest component here is consumer spending at nearly 70%, and it usually fluctuates between 68 to 70%. Investment is 18%. Think long term assets, so that's personal residences, business machinery, and property, and research and development. Government spending is at 17%. And then what's going to be important for the next chart I show you is exports to imports. So if we import as a country more than we export, then that's going to reduce GDP. Basically, we're buying more from the world than we're selling to the world. So that reduces GDP. Conversely, if we sell more to the world than we buy, that increases GDP. So the reason I wanted to point out the import export impact on GDP is this chart here. So if you look at Q1 and Q2 of 2025, you'll see that they look significantly different from the past quarters back through 2022. The big difference being the net export numbers, those are the light green bar. You'll see that net exports are a huge drag on GDP in Q1, which actually led to negative GDP growth in that quarter. But then you see a huge net positive to net exports in Q2 2025. So basically, what that is there was a ton of front loading of inventory purchasing in Q1 of 2025. Ton of imports means you reduce your overall GDP because you're buying more than you're selling. In Q2 of 2025, because we had all this inventory sitting on the books, which is actually measured here in the change in private inventories, you see that number goes up, which increases GDP somewhat. But because everyone was sitting on inventory, they didn't import in Q2 of 2025. So imports were down about 25 to 30% in Q2, whereas exports were down about 5%. So that led to a big net positive. So basically, we're seeing these big swings here because of tariffs, but it's really tough to tell what actual GDP is because of all these, the front loading of inventory purchasing followed by, sitting on inventory and burning it back down. So Q3, I think, may be very telling as to the real direction of GDP. One other thing I wanted to point out here is you'll see consumer spending is was a very small chunk in Q1 of 25, slightly larger chunk in Q2 of 2025. But if you look historically, consumer spending is down as a percentage of GDP outside of Q1 of 2022. It's one of the lowest quarters we've seen for consumer spending. So still positive, but it seems to be significantly lower than prior quarters. So last thing I wanted to show you really quickly is a breakdown of consumer spending by income bracket, because I think this chart is kind of telling. You'll see the top 10% have accounted for more and more of total consumer spending since 1990, whereas the bottom 90 have steadily declined since 1990. I know this chart is a little bit dated, but I think the trends are still very relevant. And for me, I mean, outside of the fact that I think this speaks to a disparity in quality of life between the 10% and everybody else, which, by the way, 10% I think is around 170,000 in annual earnings or more. Um, but I think this also speaks to a risk of something happening to that 10%, like a big shakeup in the white collar job market, like maybe AI. If AI comes in and wipes out a big chunk of those 10% earners' jobs, I think the GDP could potentially be in trouble because right now they're to some extent propping up GDP through their spending. But it's an interesting trend and something to keep an eye on as things progress. So that's what I have for you today. Thanks for watching. Please check out my other videos and have a great day.